Hello traders everywhere, Adam Hewison here, co-founder of MarketClub with your 1 p.m. market update for Tuesday, the 25th of October. Don't miss our MarketClub TV show this Wednesday at 5 p.m. Email us with your questions at marketclubtv@ino.com or call us at 410-867-2100 extension 129 and leave a question for us. We're looking forward to hearing those questions. By the way, you can get the email address. It's on our blog right now. But the best analysis in the world nailed Netflix, and why Tuesdays are so important. Almost every day we interact with the best market analyst in the world. The problem is most traders don't even know it or even think about it. What I'm referring to is the market itself. Here we have a powerful, dynamic, up-to-the-minute force, which is the sum total analysis by some of the smartest people in the world, all coming together in one place and working for you. It's amazing. When the market closes, that is the best indication you have of a market trend in value and what's going on in that particular market. The markets really do decipher the complexities of the economy, what's going on in Europe, the future prospects for a stock, or the supply and demand picture for a futures market. Here's a classic example. Netflix, which reported disastrous earnings last night, was pummeled this morning, losing some 35% of its value. The reality is the best analyst in the world alerted smart traders that there was trouble ahead for the stock. Yes, you guessed it. Our very own trade triangle technology nailed this one, just like it has done with so many other markets in the past. This move did not come as a complete surprise to Market Club members who have been short Netflix since $225.30. August 9th was our original sell/exit/short signal, which means you could have just got out, stayed in the sidelines, saved yourself a lot of grief and money, or you could have gone short this stock. That was the signal. So you see, you can put the best analyst to work for you every day when you use Market Club. Okay, here's why Tuesdays are important. Quite often market reversals happen on Tuesdays. Let me give you a good example of that. Here we are, and it's Tuesday. The S&P 500 is down, as are some of the other major indexes from their recent rally highs. Tuesday is when traders decide to take profits based on the momentum from the weekend and Monday. This is the theory behind our 52-week high and low rule. You follow through with momentum Friday and Monday and take profits on Tuesday. Whether this is a major reversal in the market is too early to tell, but remember, it could be. The S&P 500 is coming from a 61.8% Fibonacci retracement, which it created yesterday. There's going to be a lot of opportunities in the markets in Q4, and certainly the gold market, which we alerted you to yesterday with a plus 100 reading of the trade triangles, is up dramatically today, proving once again that the market is the best analyst in the world. Now let's go to the charts and see some of those important retracement levels that we discussed earlier and see how we can create and maintain your wealth in 2011. We're also going to be looking at some stocks a little bit differently. We're looking at Netflix, certainly, and we're also going to be looking at some other markets. So here we are right at my portfolio. Go to the portfolio page. The first stock we're going to look at, a little bit different for us, we're going to look at Netflix. And you'll see right away that Netflix is a disaster. You can see I'm just going to put our monthly charts on, monthly signals on. You can see right here, the signal was 225.30 on August 9th. The market's currently trading at $77.56. Never did we get a buy signal and all this move down. And if we go further out, let's say a couple of years, let's go even max, and you can see our buy signal right here at $31, and that was on the January 5th at $31, exit at $225. So almost $200 on the way up, and certainly $150 on the way down. So that's how you can use our Market Club trade triangles. Very, very powerful and quite frankly simple to use. And there's the signal right there, and I haven't seen anything that beats it yet in the marketplace. Anyway, let's go to our next market, and the next market, as always, is going to be the S&P 500. We'll close that in a bit so you can get an idea of where we are. Now, this was yesterday's move. We were looking at a Fibonacci retracement. If you remember, I'll scope this out just a little bit. We'll put the Fibonacci retracement in for you. And we came from the highs. I think it was this high here, or the next high. We'll go from this high right here. And you can see basically it just really nailed it, and we're still in that zone. The zone is around about I think it was around about 1250 was a key level. If you remember, that was really an important breakout on our monthly trade trials, 1258. So we didn't quite get there yesterday. I think the high we got to was 1256. But nonetheless, this is a very important day. Now, if we see this market close lower, now I would say lower than the low yesterday, below 1238.72. We're currently trading right around 39, so we're not that far away. If we close lower than yesterday's low, I think we probably, at least in the interim, put in a top, and we could see a pullback in this market. How far could we come back? I'll give you a clue on that. We could come back from this high, if that is in fact the high, down to this low. We could come back to right around the 1143. Which would be quite a pullback from where we are at, almost 100 points on the S&P 500, which is a big chunk of change. Lots of things could happen here. The earnings have been a little bit disappointing. There's been more misses than hits in Europe, and that's an earnings front. And also, Europe is still, they put off the meeting for tomorrow. I mean, it's like they just can't get their act together, and nor will they. It's, I think it's just a cluster of incidents that are just going to compel and compound and just create more and more problems for the world economy, because the politicians cannot make a move that doesn't secure their jobs. So let's take a look at the next market. And the next market we're looking at is silver. And if you remember with silver, we've been talking about silver being a little bit different. And certainly it has been a little bit different because the major trend remains negative in silver from 33.15. The market's currently trading 33.16, so it's pretty much where it started into a negative mode. It's a good positive day today, but it's still not clear, and we want to watch our monthly trade trials to get everything on board here. So that's the bottom line. But on the other side of the coin, and we've been talking about this all last week and this week, gold is a different picture altogether. And what's happening in gold is really quite positive. And I'll give you an example. All of our trade triangles, monthly, weekly, daily, all positive. They were that way yesterday. And look at today's action. We're close to closing in on 1,700. We've actually traded as high as 1,703 today. Certainly a close over this level is indicating that we'd probably go a little bit higher. Now, there's some key levels to watch in the gold market today. And those levels, I'm going to give them to you right now, are right here. The key levels are 1724, and let me get my telescope. In fact, I'll put this on the screen for you, just be easier to look at. And we just click here, Fibonacci tool comes up here. Click right here, pull this down. And we'll just sharpen this up a little bit. That's about right. So around the 1725 level and the 1771 level, all Fibonacci retracements. However, you've got everything going for you. You've got the monthly, the weekly, and the daily all green. I expect we'll see this market trade well over 1700, possibly testing the 1771 level. So you've still potential nice profit in here. Now, what is this telling us? This is telling us the world is teetering once again on economic ruin, and I think maybe it is. I don't know. But you've done a couple of things. You've created a couple of things here. You've obviously broken a trend line on the upside. You've got all your ducks in a row, so to speak. And it looks to me like you'll see this market improve with current levels. And again, maybe this market is telling you something. Remember we talked about the best analyst in the world? Maybe this is telling us something, that maybe equities are going to go down and people are going to go once again rush into the precious metals just like they did here in August and again in early September. So let's go to our next market. And the next market's crude oil. Now, crude oil was up today. Actually, we'll scope this out just a little bit further. It's had a really nice run, I have to say that. There's no reason not to say that. It would look as though we are over this resistance. However, our long-term monthly trade triangle still is negative. Shorter term, yes, you could trade this against that trend, but you've got to look at a couple of things, and just let me scope this out just a little bit more. One thing that was interesting, I noticed this, and I didn't point this out yesterday, I do apologize, but if you draw a trend line from the highs like right here, you can see pretty much we've broken this downward momentum, at least for the time being. Now the question is, how far are we going to come back? is this going to be another Fibonacci retracement level? And if it is, then we could see this market come back potentially to just below the $100 level, which is 99.53. It's a 61.8% retracement. And look at where it takes us. It takes you right back into this kind of busy area here, which is resistance, and that would make sense. We've practically hit the 94.85 level. We trade as high as 94.65 today, so it's pretty much on the 50% mark. So we may see a little more consolidation, but it would look as though the line of least resistance, at least in the short term, in the intermediate term, is on the upside in this market. So again, I think any pullback will probably be met with good support. This market has really been mimicking, if you look at the lows that we're seeing in October, this is mimicked almost identically to the S&P 500. So if the S&P 500 pulls back, you may see this market on the defensive. So let's go to our next market. The next market is the dollar index. Now the dollar index, in my opinion, should be finding support right around where we are right now. And let me just put a line chart on here. And you can see if you just draw a simple, let me put my telestrator on. And if we just draw a simple line across the previous highs, which I want to take this off because that's going to be, there we go. Hold on just one second. Let me just clear this up the screen a little bit. So clear that up, off, on, take that off. Great. And we're going to get this right now. So if you look at where we broke out from, and I'm just going to draw a freehand line across here. Basically, it's right around this level right here. And we've talked about this before. This was resistance. And now this becomes support. So we're right back on a support area, in my opinion. It also happens to be a pretty important Fibonacci pullback. So I think we'll see this market, the dollar, begin to make this turn, go back up here, and maybe test the 78.50 level. But if we take everything off the screen, let's just take everything off and go to our Fibonacci tool. Again, this is a tremendous tool to use. If you're not using it, really learn how to use it because it's really very valuable. I mean, look at where it's at. 75.92 was the area, and if you look at the, we put this on a high-low candlestick chart, you pretty much nailed it. So again, this is an area you have got the market. It's pretty much oversold in a Fibonacci zone. The major trend is up. You're just waiting for some sort of indication that it's made the turn. Then you want to get long this market. So you can get long this particular index. You can trade against there's a couple of instruments that you can use. One, you can be, to want to be long, you can use a non-leveraged ETF called UP, UUP, and that's probably the best one to use, or you can just trade against the FXE, which is the euro, but this tends to be more of a basket, the UUP, so I like that one. Anyway, but as always, check with your broker. We're not brokers here, so check with your broker. But long-term, positive; short-term, intermediate-term, negative. Just waiting for that market to make that turn, a little bit more consolidation, and I think we'll be there. So you can see today's action just in candlestick terms. It's kind of like it had a negative day, boom, kind of a neutral day. So I think if we bounce around here a little bit, then take off the 76.50 area, I think we'll see a lot more upside momentum on that market. So let's go. We've got some other markets we want to cover, some stocks as well. So let's move along. And the Reuters Jefferies CRB index clearly went over the area that we were looking at. We thought the 17 level would hold. However, the next major level in that is going to be at 323.88, which is right around here. And that's a Fibonacci retracement. So right around these levels, very close to where we are now, is where we're going to see this market. And I think, let me just draw this on the screen. So it's 323.88, which is very close to where we are now, which is right around there. And that is a 61.8% fib. Okay, so again, this could be a very important level. to watch. Certainly, this index is influenced tremendously by crude oil, and crude oil has had a pretty good run here, so we may be coming to the end of this particular move. So again, let's clear the screen, go to our next market, and we're going to look at two other markets. One is going to be a banking stock. The banks, as you know, have really been on a little bit of pressure, but they've had a good rally back, and it's a time to sell them or short them right now. And we're going to be looking at Citigroup. Citi, the symbol is C, and you can see the action so far today. The longer term negative, short term positive. Obviously, you can see just drawing a line here. I'll just draw this line very quickly. You can see we had right around this level here is resistance. I think we're going to reverse back, particularly if we close today below the lows at 30.48, which is yesterday's lows. If we come back down, like if we see this market come like that, then I think it's a really good place to get short and put your stops over 32. I still think it's still a good short. I think we can see this market come back and get back into this area right here, which is right around the 26 area, which would be a nice trade from these current levels. So let's clear the screen, go to our next market, because we take a little longer than we normally do, but there's a lot to cover, and we try to get these things for you. So let's clear it and go to our next market. The next market we're going to look at is the leveraged ProShares ultra short financials, which is still going to short the banks, and obviously that's up today. We're currently trading 65.33. The question I would have now is if we can close over the 65.97, so the 66 level today. We traded as high as 66.34 earlier. We've pulled back. I would say we close over this level today. I think that's the time to probably get long. And we're very heavily oversold, as you can see. And I think some of the selling has not been that aggressive. I think we make this turn, and you have to remember when this market turns, it turns pretty quickly. And I'll give you a good example of that. If you look, we go back. Yeah, that's good like that. If we go back here, and let me put this, get my tool on. If you go back here and you see, boom, we're oversold here. Boom, nice pop there, oversold here, right here, nice pop there. Didn't get this one, however, and if you look here, we've sort of gone lower, lower, lower. So a lot of selling pressure because we just basically came down straight from around the 95 level all the way down. So it's a huge break. Is the market consolidating to go higher? I believe the market's oversold, and I think it's going to consolidate. And I also, if we put our, which we haven't done today, which we should have done. Let me clear this off the screen. And this is a fun thing for you to try, and that's to use our Donchian trading channels. If you put this on here, that's not what I want. I want this right here. The Donchian trade channels right here. You can see we're out of the trade channel. And normally when that happens, either on the upside or the downside, the market comes back in. So I think we're way out of it yesterday. I think we're going to see this market come back, trade at least to 70 in the very short term. But again, once you come out, you always seem to come back in these things. And I think it's very important, like here, here, and so forth. So, hey, we've covered a lot of stuff today. It's almost taken 20 minutes to do it, but it's been fun. We'll be back tomorrow at 1 p.m. But be sure tomorrow, it's Wednesday, which is great. Be sure to watch MarketClub TV, coming to you live at 5 p.m. Eastern Standard Time. We do replay it, so if you miss it, you can always watch it on our MarketClub channel. So, Adam Hewison for MarketClub. I'll see you tomorrow at 1 o'clock. Have a great day trading.